Welcome back to Alpha Recap. Glad you could join us. Markets closed after a pretty headline-heavy day, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone. Big day across a handful of sectors. Some clear winners and some left repricing risk. Marcus, where do you want to kick off?
Let's start with the two big storylines that drove the tape. First, renewables and utilities getting a tailwind. Second, big tech CapEx headlines that keep the mid-cycle growth narrative alive. But mixed into that were policy shocks, the cannabis rescheduling, and a geopolitical flash that made energy markets twitch.
Right, and the day really felt like it was less about macro prints and more about specific policy and industry news re-rating pockets of the market.
Exactly. So, what really stands out here is the scale on the renewables side. GE Vernova reported a 100 gigawatt turbine backlog, and Rystad's Green Energy Index was up about 40% year over year.
That 100 gigawatt backlog? That's not a one-quarter thing. It implies multi-year production schedules and service revenue out into the future. Big implications for utilities equipment suppliers and materials.
And the Rystad rebound signals momentum. Analysts note capital flows and sentiment rotating into the space. So utilities and select energy names outperformed on that narrative.
Which is interesting, because at the same time tech headlines were mixed. Big CapEx moves from TSMC and SpaceX, but software names had darker notes with layoffs.
Yeah, TSMC started construction on its Arizona packaging site with a targeted opening in 2029, and SpaceX flagged GPU manufacturing intentions in an S1. Those are CapEx anchors for years. They support suppliers even if near-term margins are messy.
Right. And the other thing is Meta announced a 10% workforce reduction, which weighed on media and software sentiment, even as hardware suppliers got a lift from potential long lead demand.
So you've got capital-intensive supply chains on one hand and efficiency moves on the other. I mean, when you step back and look at this, it's a classic mid-cycle CapEx story.
Totally. And then the policy shocks. The cannabis rescheduling to Schedule 3. That was probably the loudest single policy move of the day.
Hold on, say that again? The federal government changed cannabis to Schedule 3?
Yes. That reclassification dominated headlines. Analysts note it's not an overnight fix, but it materially alters banking access, tax treatment, research pathways, the whole ecosystem.
So what that means in plain language is easier banking, potential insurance coverage, and more credible pathways for clinical research and institutional flows. But implementation is months, maybe quarters, not days.
Exactly. Treat it as a structural story with implementation risk. Banks, regulators, and states will have their own timelines.
Speaking of shocks, geopolitical risk popped up too. A Strait of Hormuz disruption after vessels were seized added an episodic risk premium to oil markets and traditional energy assets.
Right. That drove short-term strength in select energy names. It's a reminder that energy markets still react quickly to shipping and geopolitics.
Let's pause for a sec. Short reactions.
Yeah, that tracks.
And a quick one. Big move.
Not what anyone expected, honestly.
On the other side of the ledger, credit-sensitive real estate felt the squeeze. Rising no-ratio lending and falling potential rental yields put pressure on deal economics and loan markets.
Analysts note that financing strain tends to bifurcate outcomes. Trophy assets hold up, while secondary markets reprice sharply if credit conditions tighten further.
And crypto had a mixed day too. ETF flows turned positive for the year, but there was a $292 million protocol exploit and intermittent freezes.
That juxtaposition is important. Institutional product interest is improving, yet operational risks, like exploits, keep risk appetite constrained.
So let's walk through the day's most significant moves one by one. First up, cannabis rescheduling. What happened and why it matters.
What happened? The federal reclassification to Schedule 3. Why it matters. It loosens a number of federal restrictions relative to Schedule 1, banking, research, tax, and that can accelerate institutional engagement. But, I'll repeat, it's an implementation story.
Analysts note the potential for faster capital flows and better insurance coverage. But market structure historically treats reclassification as a multi-day, multi-quarter catalyst, not an instant normalization.
Next, GE Vernova and the renewables data points. 100 gigawatts backlog and a 40% year rebound in Rystad's index. That combo was a clear catalyst for utilities and renewables suppliers.
The takeaway there is durable demand. A 100 gigawatt backlog implies layered supply chains, blades, towers, transformers, and recurring service revenue. That kind of backlog supports multi-year revenue visibility for equipment makers.
And the correlation effect is worth calling out. Utilities equipment demand lifts industrials and materials, steel, copper, specialty alloys. But permitting and grid interconnection remain gating factors.
Right. Watch federal permitting decisions and interconnection queues. A backlog only matters if projects get permitted and connected to the grid.
On healthcare headlines, Regeneron secured FDA approval for a hearing loss gene therapy, and AbbVie committed about $1.4 billion to U.S. manufacturing capacity. Those are binary-type catalysts for the biotech cluster.
Gene therapy approvals change the game for contract manufacturers, specialty reagents, and even payers. And AbbVie's commitment is an example of onshoring in pharma.
Switching back to tech capex, TSMC's Arizona packaging construction and SpaceX calling out GPU manufacturing in its filing are multi-year stories for suppliers. Test, assembly, specialty materials.
But remember the caveat. CapEx announcements are not the same as immediate profit growth. Capacity ramps take time, and margins can be volatile during the build.
Right, and that's a theme we kept seeing. Secular themes drawing patient capital. Renewables, chip onshoring, AI. But event risk and financing frictions creating pockets of drawdown.
Let's do a quick sector roll. Utilities and renewables were outperformers today. Energy had selective strength. Cannabis rallied on policy, while real estate, crypto, and some finance names lagged.
Industrials and materials were mixed. New contracts and recycling wins balanced by supply concerns and logistics costs. Consumer and media were also range-bound, helped by targeted AI product rollouts.
I want to call out one figure again, the $292 million crypto exploit. That single event can compress institutional onboarding timelines even when ETF flows look better on the headline.
Absolutely. It's a reminder that custody and protocol security metrics matter as much as product demand in crypto.
Short reactions. Wow.
Ouch.
Okay, let's translate this into watchlist items and signal-level takeaways for listeners. Informational, not advice. First, for cannabis, monitor the implementation timeline. Look for bank guidance, state regulatory rollouts, and any DEA or FDA follow-ups.
For renewables, keep an eye on permitting and interconnection queues. GE Vernova's backlog matters only if those projects actually convert and get hooked up to the grid.
For semiconductors, track construction milestones and equipment orders tied to TSMC's Arizona site, and any disclosure from SpaceX on GPU manufacturing. Those milestones will map to supplier revenue inflection points.
For real estate and finance, watch no-ratio loan volumes, loan performance, and regional bank exposures. Credit stress tends to show up early in lending metrics.
And for crypto, follow protocol security incidents, custody audits, and regulator statements. Positive ETF flows are encouraging, but security incidents keep volatility elevated.
A couple of portfolio posture notes. Again, informational. Data suggests positioning toward firms with service and aftermarket exposure in renewables could be a defensive way to capture long-tail demand. And capital-intensive tech suppliers stand to benefit from multi-year CapEx funnels.
Credit sensitivity remains a key differentiator in real estate exposure. Analysts note balance sheet strength and refinancing access will be critical metrics going forward.
Signals to avoid overreaching on. Don't treat a single-day policy move as the final word. Cannabis rescheduling is meaningful, but implementation and state actions will dictate the pace.
And don't conflate CapEx announcements with near-term profit growth. These are multi-year stories where timing and margins matter.
Before we wrap, a few quick sector notes to monitor into earnings and policy windows. Utilities. Conversion rates on Vernova's backlog and storage deployments. Tech. TSMC construction milestones and test equipment orders. Healthcare. Commercialization timelines for the gene therapy and manufacturing updates from AbbVie. Real estate. Loan-to-value and debt servicing metrics. Crypto. Custody rules and security audits. Consumer. Early conversion metrics from AI pilots.
Final quick take. The tape reinforced the idea that secular themes, energy transition, chip onshoring, AI, continue to attract patient capital. But headline risk from policy moves, geopolitical incidents, security failures, and financing frictions keeps market conviction muted. Sentiment felt neutral overall.
Analysts note that active selection and close attention to financing and implementation metrics will likely outperform broad index tracking in the coming quarters. That's the key framing I'd leave listeners with.
All right, wrap-up time. Key takeaways. 1. Renewables momentum looks durable, but permitting and interconnection are gatekeepers. 2. Tech CapEx is real and multi-year, but near-term margin pressure and labor moves will create dispersion. 3. Cannabis rescheduling is a major policy catalyst with an implementation runway. 4. Credit stress and security incidents, especially in real estate and crypto, keep headline risk high.
And remember, this is informational only. Analysts note trends and data that suggest these themes. None of this is personal advice or recommendation to buy, sell, or hold any security.
If you want the charts or the data points we referenced, head to stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with more sector updates and what to watch into earnings. See you then.